Welcome. Okay, in the last module, we completed our transaction log. We also completed this little chart. Remember, I said don't memorize it. We're just going to use it. We're going to have it sitting right here next to us so that as we do our journal entries, which is what the step we're on now, we can refer to that. Okay, so there's a blank copy in the Google Drive, and I provided a link to it. So what I would love for you to do is to download the blank copy and either have it on your computer or print it out so that we can do this together. All right, let's get started. So I have my transaction log from the last module, and I'm going to start booking my journal entries. If you remember, we have debits equal credits, debit to the left, credit to the right. So I'm going to start with my debit transaction. Our first transaction is Falcon Inc. issues stock in exchange for an investment of $100,000. That's transaction one right here. So I'm going to start with a debit. And the first account that I see that we impacted was cash. And we increased cash. It's a positive number. And I know cash is an asset. So I go to my assets and I see to increase cash, I want to debit. So I'm going to debit cash for $100,000. Okay. The other thing I did with this transaction is I increased stock. So I go to my stock on my chart, and if I want to increase stock, I need to credit. So I'm going to book credit stock for 100,000. Okay. Now I checked, do my debits equal my credits? They do. So that's a good sign. And I'm ready to move on to the next transaction. In the next transaction, transaction number 2, I decreased cash for 100,000 and I increased inventory for 100,000. Okay, so I'm going to start with the inventory. Inventory is an asset account. So to increase inventory, I want to debit. So I'm just going to put debit inventory for 10,000. And then I decreased cash. And cash is an asset. So to decrease an asset, I'm going to credit. So I'm going to put my credit here to cash, 10,000. All right, my debits equal my credits. So I am in good shape. All right, I'm going to keep going along. If at any point you feel like you have this and you want to try it on your own, feel free to pause the video, go ahead and work through the journal entries, and then come back to the video and you can check your answers. If you're not quite there yet, no problem. Let's just continue working through it together. If at some point you're ready to stop the video, that's fine. And if you end up just watching it through and we do the whole thing together, that's all right too, because you are going to have plenty of time to practice. All right. As always, if you find that you have a question that I'm not addressing in these videos or within the module, please reach out to me. Either come to office hours or send me an email or post something in the Q&A. But definitely reach out. Let me help you. This is going to be really critical to the rest of the semester. I want to make sure you guys are rock solid on the journal entries and everything else we do today before we move on to the next module. So please do reach out and I will get back to you as quickly as I can and we'll get it sorted. All right. Okay. So transaction 3. Transaction 3, we decreased cash for 60,000 and we increased equipment for 60,000. So let's start with our equipment, which is an asset, and increase we debit. So we're going to debit equipment for 60,000. And I'm going to credit. I have a decrease to cash, and I decrease cash with a credit. So I'm going to decrease cash for 60,000. Okay, I'm going to scroll down a little bit here. All right, transaction 4, Falcon Inc. buys inventory for 20,000. So transaction 4, I increased my inventory 20,000. Inventory is an asset, so I'm going to increase with a debit. All right. And then I also increased accounts payable. Accounts payable is a liability, and I increase a liability with a credit. So I'm going to credit accounts payable for $20,000. All right, my debits equal my credits, so I'm feeling pretty good about that. All right, transaction 5, Falcon Inc. sells consulting services for $30,000 on account. So transaction 5, I increased accounts receivable. Accounts receivable is an asset, and I increase an asset with a debit. So I'm going to debit accounts receivable, and that was $30,000. And then I'm going to, I also increased revenue. And I look at my chart and I increase revenue with a credit. So I'm going to credit revenue for $30,000. And my debits equal my credits. So I am a superstar. And so are you. All right. Moving on. We're going to pay, wait, got ahead of myself. All right. We're going to pay our employees $5,000. So this is transaction 6. So we're going to decrease cash and increase expenses. So let's start with the expense. You can start with either one. I just happen to know this is going to be the debit side, and I like to start with my debits, but you can do it either way. So we're going to increase expenses, $5,000. So our expenses to increase, we're going to increase with a debit. So I'm going to debit expenses for $5,000. Now, as we move through the semester, we'll start talking about what kind of expense it is. So we would call this payroll expense or wages expense. But you know what? For this unit, let's just call it expenses. We'll put them all into one category because I don't think we need to get too crazy when we're just starting to learn. After you guys have this down, then we will spice it up. All right. So in transaction 6, we also decreased cash. Cash is an asset, and I decrease an asset with a credit. So I'm going to credit cash $5,000. My debits equal my credits, so I am moving on. Okay, next we're going to pay rent of $2,000. This is transaction number 7. We're going to increase expenses by $2,000 and decrease cash by $2,000. So to increase my expense, I debit. So I'm going to start there because we always start with our debits. And we're just going to call this expenses. Again, when we get more farther into the semester, we'll call that rent expense. But right now, let's just call it an expense. Okay. Then I'm going to decrease cash by $2,000. So cash is an asset, and I decrease it with a credit. So I'm going to credit cash $2,000. All right, we are rocking and rolling. Let's keep this party going. All right, transaction 8, we're going to sell consulting services for $40,000 on account. So I look at transaction 8, I increased accounts receivable and I increased revenue. So accounts receivable is an asset and I increase it with a debit. So I am going to debit accounts receivable for $40,000. All right, and transaction 8, I also increased revenue by $40,000. Revenue is increased with a credit, so I am going to credit revenue for $40,000. And my debits equal my credits, so I am ready to move on. All right, transaction 9, we bought a yacht. Oh, I'm so excited about that yacht. All right, so we increased equipment. We called the yacht equipment for $250,000, and we increased accounts payable for $250,000. So let's start with our increase to equipment. Equipment is an asset, so we increase an asset with a debit. So I'm going to debit equipment $250,000, and Then I also increased accounts payable. Accounts payable is a liability, so I'm going to increase my liability with a credit. All right, moving on. Oh, and my debits equal my credit, so that's good. Okay, so we're going to buy t-shirts for $1,000 on account. This is transaction 10. And in transaction 10, we increased accounts payable and we increased expense. So we increase expense with a debit. So we'll start there. Debit expenses for 1,000. And then accounts payable is a liability, and we increase a liability with a credit. So I'm going to credit accounts payable for 1,000. All right. We're getting almost to the end. Is that happy or sad? This is kind of fun, right? If you think this is fun, you might want to think about accounting as a career. Okay. So Falcon Inc. collects cash related to transaction number 5. So we're looking at transaction 11. We increased cash and we decreased accounts receivable. Okay, so cash is an asset and we increase it with a debit. So I'm going to debit cash, $30,000. All right, and I decreased accounts receivable. Accounts receivable is an asset and I decrease it with a credit. So I'm going to credit accounts receivable. Remember, receivable means we're going to receive it in the future. And I'm missing a 0. All right. So final transaction number 12. And in number 12, we paid a dividend. So we decreased cash and we increased dividends. So I increased dividends with a debit. So I'm going to debit dividends for 31,000. And I decrease cash. Cash is an asset, so I decrease cash with a credit. Credit cash, 31,000. Okay, so those are our journal entries for our 12 transactions. In the next video, we're going to take those journal entries and put them into T accounts. But for now, have a beautiful day, and I'll see you next time.